So everything was going fine today in the markets. It was going up. I felt like I was recovering from yesterday's losses, and in fact, the losses for the week. And then around 12 o'clock, I checked my phone, and I am break even on the day, and it just keeps going down from there. So I want to go over that, what I'm seeing in the charts, what I think the market is doing overall, what we can expect tomorrow and in the future ahead. But first, let's take a look at my trades today and how my account is doing overall. All right, with my trades today, I decided to buy 25 shares of T-Flow, which is just kind of it's a treasury account. I don't know a whole lot about it. I just know that it's a safe place you can put your money, collect a little bit of money while you let it sit. So going into cash instead of just keeping it into an account, you put it in T-Flow and it will allow you to collect some interest, some kind of dividend. So that's what I'm doing right now with that, just on small amounts. Then I did the 30-20-10 strategy like normal. I did it at 51.30 and 51.20 and placed that this morning. It got filled. And so on top of that, I didn't make any other trades today. So it's pretty light on the trading side. And the big reason for that is because I don't have a lot of cash available. You can see that since the market has gone down, I'm actually in the negative on my buying power. So I'm nearly down $200 on my buying power. My buying power usage percent is at 121.5%. It's huge. And that's because my account value has gone down and my contracts remain the same. So I'm in a bit of a struggle there. I may need to consider liquidating some of my account positions to offset that loss and be able to continue to trade the E-mini S&P 500, the 30-20-10 strategy. So what position am I probably going to liquidate tomorrow to be able to make the E-mini S&P 500 trade? It is going to be my wheat position. I'm up 90 days on it. I've been holding on to it for 8 days. That's a pretty good return. It's holding up nearly $3,000. So that would be an easy one to liquidate without getting any of the other positions. Now, I don't have a whole lot right now. You can see that I've got my E-mini S&P 500, I've got my wheat, my copper, and Tesla. So with the E-mini S&P 500, that's not going to get liquidated because I'm doing my 30-20-10 strategy. I've got my wheat position, which I opened up recently. I'm up on it. It's a pretty good return if I was to liquidate it right now. My copper position, I just opened up that position, which is doing pretty well. We can see here that I've got $318 at the open, and that was whenever the market closed. I took a screenshot of this. And then Tesla, I'm in the red on that. I'm not going to liquidate that position. I want to hold on to it until it turns up, and I think it's just a matter of time for Tesla. So I'm just going to continue to roll that position. Really, the only thing I can liquidate right now is my wheat position, and it's a winning trade. It'd be an easy way to just get out of the position, collect my money, and then be able to offset this. Now, the other thing that could happen is if the market somehow magically decides to correct and come back up, I'm not going to be in the same position. My buying power will be positive again. My buying power usage will be normal again. And so I'll be able to make some choices there. But I am eyeballing my wheat position and possibly liquidating that position to be able to offset and get some more capital freed up. So before we get into this huge sell-off that happened this afternoon, let's take a look at my Tesla position. So we can see here on the daily chart with Tesla, we had a good strong push up. We even were breaking the 21 EMA here. It was moving up, pushing up, and I thought we were basically breaking out on Tesla. So that was a really good thing to see, and then it crashes back down. Now, it didn't do as bad as the S&P 500 today, but it still went back to around its normal price level. So it was up overall today, but it ended up falling back further than its highs. It ended up falling back below the 80 EMA, and so that really wasn't a good sign to see today. We were seeing continued strength, really good things going on, and then it pulls back. And we'll get into why it pulled back and the more details of the future here in just a minute. Copper overall, like we saw earlier, was pretty good. Let's take a look. We can see that copper is pulling back now. We can see that the IV rank right here is 93, where before it was around 100, and it just gradually started dropping down, and that's good to see. That's what we want to see. We want to see, now that we've opened up our position again, we want it to contract. We want the prices to be stable. We don't want to see these big crazy moves over time. So we want it to be calmed down, getting more toward an average price, and then we can start making money on that, which overall it's doing good. So this is what happened today, guys. The price went down, 2 days ago, it went down and touched the 21 EMA, and then it pushed back up. Then yesterday we had a nice green candle. It was a doji. We didn't break the 80 EMA. That was a little concerning, but we were still pushing up. We were still holding that 21 level. We hadn't touched that since the 21st of February. So we were due for a touch on the 21 EMA. The problem is today we pushed up really high. We had good highs. Everything was going well. And then around 12, 1 o'clock, it crashes down big time. Now we are below the 21 EMA, and that's not a good sign. It's a warning sign here that we're about to turn directions. Now, this could just be a pullback, but this is something to be concerned about, especially whenever I have as many positions as I have in the E-mini S&P 500. I'm doing the 30-20-10 strategy, and that requires me to put in a position every day at the 30 days to expiration, all the way down to 0 days to expiration. So I can't have the prices fall and stay down like this without being significantly impacted by this strategy. So what is it that's really driving this pull down? We have jobs data coming up on Friday. I don't know all the details of it, but I know that we have a key economic indicator that's going to be shown at around 8:30 Eastern time tomorrow morning, and it's going to tell us the jobs data. Now, I think it's optimistic, but I believe that that is what's driving the pullback here. The thought about the jobs data here is that it is going to help decide how many or if any rate cuts that we have for the rest of the year. And so that's what the market is waiting on. Is the jobs data going to give us positive results for a rate cut in the future? If it doesn't, we could see the stock market continue to decline. I don't know what this is going to look like in the long term, but that's kind of what I'm seeing. That's how I'm understanding what I've been reading and watching, is that tomorrow morning is going to be a crucial day in how the rest of the year works. So I'm a new options trader. My goal is to get a 50% return by the end of this year. And if you want to follow me on my journey and maybe learn something along the way, hit the subscribe button, hit the like button if this video was a help to you, and we'll see you in the next video.